All right, everybody, welcome back. So in this video, we're going to talk about something that I get asked all the time. You think I'm ready to go live? I hear this. Do you ever think about that? Maybe you have been trading in paper on your little account and you're keeping it little because you want to start with a small account when you go live, and you've been swinging at it and doing the work, and it's been days and weeks and months, and you've been in paper and you're just really wanting to go live. And this is mostly for you futures traders, but I think it does apply anywhere in the trading world. Am I ready to go live? Should I take this to the next level and begin trading in the real market with real money? I've answered this question a lot of different ways in the last few years, but with options, it's a hard thing to answer, mainly because it comes from the results, right? It always comes down to the results. In stock and in futures, in Forex, we can specifically say what kind of move we need to be profitable. We know what it is, right? We can specifically point to something and say, all right, I'm going to risk $5 and I want to hit a $10 profit at least. And we can look at the market and even measure and define, can it even make a move that far, right? So for an example, if we were looking at this bit of range right here, and we wanted to trade from high to low, we could ask that question. Now, this is a really choppy, nasty market, but it did have a low and it did have a high. So it's range bound. If we were trying to take a trade and we only wanted 2 points, could we trade in this and get our 2 points? Yes, because there is enough room to do that. But if we were going to take this trade and we needed 50 points, there's not enough room here, right? We would have to stand aside. There's just not enough room. And if you find that you're consistently taking trades, risking 3 to make 1, then you're taking trades where there wasn't enough room. So a very simple way to define, am I ready to go live, is not based on your win rate. It's based on your risk to reward. Now, there are a few styles where that doesn't fit. If you're a scalper, for an example, risk to reward is not going to be your only metric. It's going to have to be based more on your win rate with a little bit of risk to reward. But for everybody else outside of scalpers, it's the other way around. Risk to reward is first, win rate is second. So are you ready to go live? Calculate what your real risk to reward is. I call that the HRR, your historic risk to reward. And I use the word historic because it's already happened. It's in the past. In the past, what have you accomplished for a risk to reward? Are you hitting the industry's standard of 2 to 1? Now you can write that 1 to 2. You can write it 2 to 1. We say the words 2 to 1, no matter how it's written. Are you risking 1 to make 2? That could be 1 penny to make 2 pennies, 1 point to make 2 points, 100 to make 200. It's still 1 to 2, 2 to 1, right? I'm risking 1 to make 2. We can look at our results of the trades that we have been taking, and we can ask, am I hitting the industry standard of 2 to 1? If you're not at least doing that, it's a very simple answer. No, you're not ready to go live. If you're thinking, yeah, that risk to reward stuff seems pretty important, I should probably learn how to do that. No, you're not ready to go live. If you don't even know what that is, you're definitely not ready to go live, right? It's the most important thing out there. It's more important than entries, exits, patterns, setups, strategy, there is nothing more important than risk to reward ratio. Without it, you will fail. I'm not even going to put a little asterisk next to that and say, well, possibly, maybe if you do these things. No, if you don't have your risk to reward under control, you will fail. You will not be a successful day trader, period, full stop, end of story. So how do we calculate the risk to reward? We take our win and we divide it by our loss. One single trade would mean that we take our win and we divide it by the stop that we used. Or we take our loss and we divide that by the target we were going to use, right? But let's just talk about wins for the moment, risk to reward. If I took 5 trades today, then I would want to add all the wins and I would want to add all the losses. And at that point, I would want to take the aggregate wins divided by the aggregate losses. And that number is going to be my risk to reward. All of this discussion at this point would be our historic risk to reward. What was my average for the day? My average risk to reward for the day. And on the other hand, for one single trade, what was my risk to reward in that trade? Now, I can tell you for a fact that I don't even hit the risk to reward that I aim for a lot of times. It doesn't mean that I don't aim for it. It just means that price didn't work out and I didn't get it. But I at least wanted to know that I had the potential to get it. It's really important, right? If I need 50 points and the market is only giving me a 10-point range and I try to trade that anyways, if I actually am successful, it's going to be luck, not skill, right? So if this is my range and I'm trading from high to low, this is a significant range. That's a good 50, 60 points. Almost 60. If I only need 10 of that, then there was room for me to be profitable. But if I needed 100, this was not enough room for me to be profitable. I should have not have taken the trade. So historic risk to reward. Looking back at the trades that you took on a day-to-day basis, week to week, month to month. Heck, you could do the quarter and you could do the year. I like to break mine up into Globex trades and daytime trades, RTH trades, mainly because the size of the trade is different. In the Globex, I use more contracts, I use a tighter stop, and I use a smaller profit target. In the regular trading session, I use less contracts, a wider stop, and a bigger profit target. So I calculate those two differently. The funny thing is I'm still aiming for the same thing. I don't use a 2-to-1. I use a 5-to-1. The industry says you should at least hit 2. The higher, the better. I aim for 5, and every year I'm trying to get that number higher. I want an average of 9-to-1, 12-to-1, 15-to-1. That's my goal in life. Every week, I'm looking back and I'm asking, how can I get this number bigger? What can I do to improve this number? So that's historic risk to reward. Take the one trade that you just had, your win divided by your stop. Take the trades for today, all of your wins divided by all of your losses. Do the same thing for the week, the month, whatever. And that's going to give you your historic risk to reward. And if you're doing better than a 2-to-1, then you can start asking the questions about your win rate. Notice the win rate is the second part, not the first part. But the win rate, I mean, you know, it does matter. If you're trading a 2-to-1, then you need to win better than 30% of the time. It's actually like less than that, but let's say 30. In fact, let's bump it up. You need to win 40% of the time if you're trading in a 2-to-1. Now you can ask that question. Are you winning at least 40% of the time? If the answer is yes, you're winning more than 40% of the time and you're trading better than a 2-to-1 average, you're ready to go live. Take that show on the road. If you're not hitting a 2-to-1 consistently, or you're hitting a 2-to-1, but you're only winning like 20% of the time, you're not ready to go live. You got to get that win rate up, or you got to grow your risk to reward to a higher number. With my 5-to-1, I only need to win around 1 out of 5 trades. When we talk in tens, I usually say I need to win 20% of the time, 2 out of 10. That's all I need to survive. If I win more than 20% of the time, I'm growing. And guys, I win more than 20% of the time. Thing is, I don't have to. I could survive at 20% wins. I can grow at anything beyond 20. So there's a difference, right? There's a difference between survival and growth. What do you need to survive? I need a 20% win rate to survive. Okay, so that's historic risk to reward. The other one is strategic risk to reward. Just like it sounds, the first one is historic risk to reward. It's in the past. The other one is in the future. It is your strategy versus your trade results. What are you trying to do versus what are you actually getting? And in this situation, it's what's the plan? I'm planning to get a 5-to-1. My trade results may show that I only got 3-to-1 or 9-to-1, right? We can aim for a 2-to-1 risk to reward ratio and end up getting way better than 2-to-1. But we at least were aiming for that too, right? My trade results last month, for the whole month, I had an average risk to reward of 8.5-to-1. Now I was only aiming for 5, but I was consistently hitting more than 5. Hey, that's fine with me. I want to grow that number bigger. So my strategy says, if I don't have an opportunity to make 5 times my stop, I can't get into the trade. That's my strategic risk to reward. What is your strategy asking you to hit? Do you need a 2-to-1, a 3-to-1, 4-to-1? What is it that you're trying to accomplish? And then answer that question, are you actually doing it? And you would have answered it with your historic risk to reward. So are you ready to go live? Do you have a risk to reward that is appropriate and a win rate connected to that that says you're ready to go live? If you can't answer your risk to reward, you need to calculate it, and it tells you you're not ready to go live because you didn't even know what that was. You're going to want to spend more time on risk to reward. And then if your numbers are too low, then you're not ready to go live. You've got to get those risk to reward values up more than a 2. To calculate your strategic risk to reward, you want to take your stop and multiply it by whatever your number is that you want to have, right? So for me, I like my 5-to-1. And in the Globex, I use a 2-point stop. So my Globex stop is 2 points. I'm trying to get a 5-to-1. So we take my 2 points multiplied by 5, and I can see that I need a target of 10 points. So when I attempt to take a trade, if I do not see a path to my 10 points, then I know I can't take that trade. I have to stand aside. I can't get in. I'm not allowed to take that trade. I'm going to have to do something else. Look for a different entry, wait for, a different time frame, change to a different strategy, something, because my 2-point stop for a 10-point target, if there's no room for that, then I just can't trade there, right? For an example, if I was for some crazy reason trying to trade in this junk, if the entire thing is 20 points and it's this messy, what makes me believe that I'm good enough to get 10 points in this trash? Is it doable? Yeah, but it could be one heck of a fight. Do I need that much risk in my life? That much stress? Probably not, right? I would want to let that go. But if I only needed 3 points in this 10-point range, oh yeah, 20-point range, I only need 2. Yeah, I see a path to 2 points in all of that mess. So you want to take your stop and multiply it by the risk number that you are focused on. If you are focused on a 2-to-1, take your stop and multiply it by 2. That's the target. Take your stop and multiply it by 3. That's a 3-to-1 risk to reward. And then look at the chart and ask, do you see a path to that number? Because if you can't see a way for price to get to that target without making it through some crazy extreme junk, then you have to say, no, it's very unlikely I'm going to hit that target. In this situation right here, for an example, that's a 50-point range. If for some reason I take this trade and I need 150 points, then I have to look at this and say, well, the path to 150 points is a lot of trouble. I'm going to need to get through this low, this high, this pivot point here, and this pivot point here. I'm going to have to break the 50, the 10, the 20. My goodness, I'm very unlikely to hit that target. Could it hit that target? Yeah, price can do, whatever the heck it wants, but is it likely? No. And yet, look, I mean, it made it there, right? So if I had done it, it would have got there eventually, but that's hope. That's not strategy. That's not tactic. So are you ready to go live? I would be very interested to hear if you're ready to go live. Everybody have a good day. I appreciate you, and we'll talk later.